Welcome to Markets Now. I'm Michelle Rook along with Allison Thompson with the Money Farm. And it was a down day in both grain and livestock futures, even outside markets. And Allison, kind of a risk-off day here, pretty much commodity-wide, wasn't it?
Yeah, honestly, it was a broad market sell-off day, kind of across the board. Obviously, started with financial markets. Overnight, we did see Fitch actually warned of downgrading the U.S. credit rating again on some banks. So that definitely didn't help the banking sector this morning. And on top of that, we did receive some news overnight from the Chinese economy, which didn't bode well either, especially for demand. Just the opposite of here, they're actually lowering their interest rates to try and spark their economy, like here where we're trying to slow it down. So they're seeing just the opposite. And obviously that spurs some concern about demand. So obviously commodities fall into that, energies and grains, and both saw pretty steep sell-offs today due to that news.
And then we also had the better than expected crop ratings, 5% on soybeans, in fact. And that also kind of weighed on corn and beans, especially.
Yes, yes. To see a good increase here yesterday definitely weighed on things. It came in better than expected for corn and soybeans, and actually both are now reported above last year at this time. So really unexpected to see such a good condition rating increase here in late August, not normal. So there's obviously a lot of speculation on what that's going to mean for yields going forward. We'll see more results next week, hopefully, in the Pro Farmer Tour to give us a better idea of where yields are at. And at this point, either it's going to confirm what the market's thinking, that there are some better yields to be found out there, or we're going to see it change their mindset and they could actually start to turn this market if production looks like it could be lower. We've known that the Pro Farmer Tour has definitely been a market mover in years past, especially when it changes what the market perceives as being out there.
And technically, December corn did not have a good day, closing below the July low, right?
Yeah, it was definitely an ugly day in corn. We've been watching that 481 area for a couple of months now, and we have been able to hold it. Today, we broke through it and unfortunately weren't able to close back above it today. So obviously, definitely can lead to some lower prices here. We do have to be aware that it's definitely going to be fed to the downside now. These are levels that we haven't seen in a couple of years, going back to 2021. So it's definitely going to cause, I think, a little bit more of a sell-off, especially with the funds involved at this point. But we'll see. Again, yields and demand are still going to be watched very closely. We just need a spark in one of them to really ignite this market and turn it around.
Yeah, sometimes bottom comes in when the news is the worst, but we'll see if that's yet to come or not. Okay, soybeans, what about technically there? We've held the 100-day moving average, the $13 level, but for how long?
Yeah, that's the next question, especially with corn and wheat being lower and seeing some steep losses there. Honestly, it was impressive to see that soybeans have been holding on for so long by themselves, but they definitely joined the party of trading lower today. But they have been really stuck over the past couple of weeks between that 100 and 200-day moving average, which is okay. I think the market's trying to figure out what production and what demand's going to do going forward before it really starts to move. That 200-day moving average, that 1334 area, has definitely been a firm area of resistance. We actually did trade above it on the overnight, but once that level got hit and we failed to go higher, it did trend lower through the rest of today's session. So not unexpected action, but we lacked anything fresh news to support it to the upside. On the other end, we have had firm support at 1290. And given the sell-off that we saw today, I'm really glad that we were able to hold $13. So both of those levels will be worth watching here as we go forward.
And the wheat market, another down day there. Is that all technical selling, Black Sea fatigue, what?
Yeah, we're really lacking some fresh news on wheat. It's definitely a headline grabber, that market seems to be, and unfortunately it's just grabbing all these bearish headlines lately. So we've seen lower lows and lower highs be a pretty consistent theme in wheat, and it just doesn't show any signs of changing. We need some fresh news to spark that market, and there isn't any. Black Sea news remains pretty volatile. Tensions are escalating there, but the market's treating it like it's old news already, and maybe rightfully so. It seems that they're finding some other export routes for Ukraine's agricultural grains. Today, the news was that Romania was going to help them double their monthly exports. And if that ends up being true, it's going to exceed the current USDA estimate. So obviously doesn't bode well for corn and wheat markets. So those types of headlines definitely aren't helping things. But again, the truth will be in reality if it really does happen. We should have it all priced in by then if it does. But again, with tensions and attacks continuing, it definitely leaves some questions there. But the trade's obviously more comfortable taking a risk off mode here, at least at the moment. And on top of that, we do have harvest progressing pretty nicely for winter wheat, and also spring wheat starting to pick up here in my area as well. So starting to see some of those harvest lows isn't too surprising either for this time of year.
Yeah. So what do you think? Are the yields coming in better than expected in spring wheat or not?
Yeah, that's the $1 million question. It's always hard to tell what wheat's going to yield. But honestly, we've really started to see more guys enter the field here over this past couple of days. And this week is really supposed to ramp up. And honestly, I've heard some pretty good yields so far. The last couple of years have really cemented that trend, at least in my area here in the Red River Valley, of seeing some better yields than what were expected. So if that continues, it definitely will help production outlook here. But again, it questions how some of those outlying areas do out to Western North Dakota, and of course up to Canada. It's still extremely dry as well. So just because it's doing well here doesn't necessarily mean it's that good everywhere, but it definitely is a good thing, and that's probably pressuring some of our prices as well.
So technically, where do we need to hold here in wheat?
Yeah, it would be really nice to see Minneapolis wheat hold where it's at today. We've kind of been watching that $7.90, $8 level for both September and December spring wheat. Definitely are testing that area. Actually, September, I think, closed below it today. So we'll have to be watching that. But even though we've seen it come a lot lower here on the future side, we have opportunities on the spreads. So I've been talking to a few guys here that have September contracts. If they're interested in storing the grain, they are seeing a decent roll out to March of about 25 cents today. So something to think about as well. Hopefully you'll see some better basis opportunities going out that far as well. So there are opportunities out there, even though we have seen the future slide.
And livestock, did they just get cut up in the risk off today too?
It appears that way. Outside markets have definitely become a big part of grains and livestock and how we're trading and what that means for demand going forward. Live cattle have really strong fundamentals, so their uptrend probably could continue here. So pullbacks are necessary in a strong uptrending market. But again, we need some fresh news there as well. And hogs definitely came under pressure today as well, especially given the China news, since we were looking at hopefully seeing some better pork demand as they increase their herds there. So it's all definitely tied together, and not surprising to see a little bit of a pullback there today.
Thanks for joining us as always. Allison Thompson with the Money Farm. That's Markets Now.